Guys, welcome back again to my channel. Angie here, and thanks a lot for clicking this video to watch. You're welcome. I hope you are doing well, and thanks a lot for the support, for subscribing. And if you haven't subscribed, please subscribe. Kindly consider subscribing to this channel and you won't regret. Today's video, I'm going to be talking to you about some of the things I did to become consistently profitable in the market. And so this is going to be for beginners who are very new to the market, who are kind of struggling to see some sort of profits in the market. And these are the things that I did that personally helped me, and I know will also help you too. So if you find yourself in this category, just stick and stay. Don't go anywhere. Okay. Now the thing is, it's not about how much information you have about the market, even though it counts, but it's not really about how much information you have about the market or how many months of year or years you spent learning how the market works or learning the theory bit of the forex market. But really it's about the discipline that comes with, you know, having to take the trade before, during and after taking the trade, or things that happen, what you do, how you control yourself, how you control your emotion and all that really matters in the forex market. So my first point is going to be that you have a trading plan. Yes, you have a trading plan, and it may sound cliche, but it is really the absolute truth. If you don't have a plan, you're not going to succeed in this market. Yes, and I think that's why it's even a cliche, because that's the only way you can really find some sort of profits in the market. And some of the things I'm going to say, you can include them in your trading plan, and yeah, it will help you. So in your trading plan, you have to identify the time that you would want to trade, the days you would want to trade, and also the setting, the environment you'd want to trade in. And when it comes to the time that you want to trade, you want to find a time that the market is most volatile. And so if I say most volatile, I'm talking about how fast the prices moves, yeah, or the prices fluctuate. And by this, you can be able to predict early where the direction of the prices would go. Do you get it? The higher the volatility, the higher the predictability. So if you're trading a pair like the GBP USD, the GBP USD is more volatile in the London session, and in Ghana here the London session is from 7 a.m. to I think 12 p.m. thereabout. That's when the pair is more volatile. The GBP USD pair is more volatile, so you should find the times that these pairs are more volatile to trade, and it will really go a long way to help you to become profitable in the market. And also secondly, you should identify the days of the week that is helpful to you or more profitable. Research has stated, and by experience I know, that Mondays and Fridays are the worst days to trade. Mondays the market is static, and I think Fridays the market is quite unpredictable, so you'd want to shift your trading days to Tuesdays, Wednesdays and Thursdays, right? So that you would be able to be profitable. It's not really easy to trade, you get it? And so you want everything to work together for your good. You want everything to come together for your good. And so you are going to have to be careful with everything that goes around your trades. I think one of my mentors, or my online mentors, I follow this woman, Karen Fu, and yeah, she has been the person who has had so much impact in my trading career. And she told me, or I watched in one of her videos, that there are actually 3 types of trades: the high probability, the medium probability and the low probability trades. So as a beginner, you might want to shift your focus to the high probability trades. And so with a high probability trade, you want to have all the factors skewed in your favor. So when it comes to the time, you want to know the exact time of the day that pair you are trading, or that pair you are looking at, is more volatile, and also the days of the week that is going to be profitable to you. Yes, secondly, the environment or the setting. It's very important to have a very quiet place to be, so that all your focus can be on the charts. You don't want to have you don't want to be in a noisy place like your workplace, or like outside having fun executing trades. No, that wouldn't work. And most of the time it won't. Really, it hasn't worked for me, and I know it will never work for me. If I go to work and I start to trade, it has never worked for me. So never trade at work, never trade in a setting where there's so much noise and it's very difficult for you to concentrate on the trade or concentrate on the charts. Thirdly, you should think about your psychological state as at the time you are trading. If you're feeling angry, you're feeling sad, or you're feeling revengeful, let's say you've taken a trade and the trade didn't go in your favor, so you are taking the trade out of revenge. If you are, you know, seeking to make money because you are in a hurry to do something with the money, or you shouldn't go to the charts when you are in any of these situations. Yes, you shouldn't go to the charts when you are hungry or angry, or you are not really stable psychologically to take a trade here. You might make the wrong analysis and it will go against you during your trade. And then again, you should have a very strong strategy, or a strategy which is really working for you. Now, a lot of newbies or a lot of beginners come into the market thinking that there is this holy grail strategy, which really there isn't. There's no specific strategy for you that if you take this strategy you are going to be 100% profitable in the market. No, it doesn't work like that. You most of the time would have to build your own strategy based on your personality, or how you want to, you know, execute your trades and how you see the market. Everybody sees the market in a different way. Okay, so based on how you see the market and based on some factors, personal factors even, you are going to be able to build your own strategy and work around it. Yeah, if you are somebody who trades chart patterns, who trade channels, who trades using Fibonacci retracement tools, or there are lots of other strategies you can pick, but then it's very important to pick one strategy and stick to it. And in the strategy, you should have your entry strategy and your exit strategy. The entry strategy and the exit strategy are equally important to note. And so the exit strategy, for me, I only take a trade after a retracement. I don't take a trade when the candles are moving. Do you get it? And I feel like I can catch a pip, or I can catch some pips when I see it running up or running down. No, I only take a trade after a retracement. And so that's something that I've put in my trading plan, and so you should also put in your trading plan. And also you must have some confluences or some confirmations that actually form a basis for you taking that trade. Do you get it? And it's good to have a lot of confirmations, yes, or a lot of confluences, because the more the confluences, the better your trades. Okay, so normally a lot of people don't look at fundamental factors, but it is as equally important as the technical analysis or the technical factors that affects the market. So for me, every trade I take is fundamentally backed. So it's good to do your analysis. It's good to know how the pair is doing fundamentally before you use the technical analysis to enter into the trade. The more the confirmations you have or the information you have about the pair, the better your trade, or the more probable that your trade is going to be profitable. Do you get it? Yes. So it's good to know your confluences, to write them down before you take a trade. You should also know your time frame analysis. It's good to look at other time frames to confirm your trade. Mostly it is advised that if you're a beginner, you trade with a trend. You never trade against the trend. The trend is your friend. Do you get it? So mostly you have to go to the daily time frame or the 4-hour time frame, mostly the daily time frame, to figure out where the trend is, whether it's an uptrend or a downtrend, and then scale it down to the 4-hour, to the 1 hour, to the 30-minute time frame, and see which candlesticks are going in that direction. Okay, so the reason why it is good to trade in the direction of the trend is that whenever you trade against the direction of the trend, it might be a retracement, and you never know where the retracement is going to, you know, you can never calculate where the retracement is going to end, and so it's not really profitable. It's good to trade with the trend as a beginner, and all these can help you to become profitable in the market. Also, before entering the trade, you need to identify, or you need to calculate your risk as usual. And risk management is by far the most important thing in forex trading, because you can lose more than you can win. But if the risks you take on the trades are managed properly, you can be profitable even though you lose more than you win. Do you get it? So don't take a lot size that is going to hurt your account. Take a moderate lot size and be satisfied with your risks that you put on the trade. You should be able to be in a position where you should accept any outcome from the trade you're taking. Do you get it? Whether it's going to be a win or a lose, you should be in a position where you'll be able to accept that risk you put on the trade. If you take a trade and you are agitated, you are anxious, you are scared, then it really means that you're not supposed to take that trade. Yes, but you should be relaxed and let the market do the work for you. Again, do not micromanage your trades. Okay, do not be moving stop loss here and there. Just become relaxed and watch the trade play out. One of the things that really helps you to be very emotionally unattached to your trade, I've mentioned earlier in my previous video, is that you should use the money that you're comfortable losing, or you should use the money that you're not emotionally attached to. And that's the only way you can really make any profits in the market. So yeah, you need to be emotionally unattached to your trades. Your trade should be here and your emotions should be here. If you are the type of person who is going to be watching the charts like a hawk whenever you enter the trade, or you are likely to micromanage the trade, then you should delete your account after you take the trade. Yes, so if you are comfortable deleting the account after you take the trade, then it means that you should be in that trade. And if you delete the account, the trade will still be running, because really it is your broker that is taking the trade for you or on your behalf. So you should be able to be in a position where you delete your MetaTrader 4 or MetaTrader 5 app, or whatever app that you are using to take the trade, and you set your stop loss, you set your take profits, and just become to and watch the trades run. Now, after exiting the trade, whether the trade hit your stop loss or your take profits, or you exited it manually, you shouldn't take another trade on that same pair. There is a high probability that you are going to lose it. Yeah, I forgot to add that you need to trust your analysis. You need to trust whatever you saw before you took that trade. It's very important to trust your analysis, to trust your trades. Don't be looking at other things, or don't be looking at your trade and think and doubt it. You need to be in a position where you trust your trade at least 90% and let the trade run. So after exiting the trade, leave it be. Don't take any trade again on that particular trade, unless of course you've done another analysis and you are really comfortable or confident that you're going to be able to make some profits. But really, 9 out of 10 times it doesn't really work. It doesn't really work, especially if you lost the trade and you feel like you should take a revenge trade to recoup your lost profits. It wouldn't work. Don't do it. Don't do it. Yes, so that's going to be the end of my video. I hope I've been able to help you some way or the other. If you are a beginner trader and you're still struggling to see some profits, this is just a little that I have for you today. In my next video, I will talk more about it. I'll talk more about what to do before, during, and after you take a trade, and how to be consistently profitable. It's actually the reason why I created this YouTube channel, really, because I realized that a lot of people are not really making profits in the market, unfortunately, and these are some of the things that has helped me to become profitable in the market, and I believe would also help you to become profitable in the market. If you like this video, please give me a like button. It helps with my YouTube algorithm. It helps other people to see the video, so please leave a like. Please comment under the video some of the content you want me to put out here, because sometimes I'm really confused as to what to put here, and I would make it, I promise. Subscribe to my channel and share the video, because why not? See you in my next video.